Right, mic check. Perfect. Okay. So I thought I would do a short stream just to record, just to review yesterday's trading, um, yesterday's price delivery. Um, I took a short here and got out here for a small $94 profit. It was very easy. I really struggled this week. It was very hard to make money this week. I was trying to trade lunch macros for reversals. Both times I shorted the high, but both times I stopped break even because of how long they held it in these ranges before allowing it to move lower. I took one small loss in here, a $40 loss. So over here, I'm very happy with just taking the easy money, the $93 profit, mitigating that loss, plus a little extra. I left the charts around here. I was leaning long yesterday to target these highs. Uh, because these are a very clean buy side liquidity pool here. And it didn't have to go here. That's just what I wanted to aim for in general. In the morning, this short was based off of this liquidity pool right here. So I was looking for a 10 o'clock reversal. I pretty much called this perfect. I said that I wasn't expecting it to move up until 11:30 for the lunch session, the lunch macro. And so I was wrong about the timing, but I was not wrong about it moving higher and before moving higher, generating buy side liquidity. And so I left here because I said that I thought it was just going to kind of chop sideways and generate buy side liquidity because there wasn't much of it up here. And so that's exactly what it did. It generated buy side liquidity, chopped around lower. Low was formed right before the 1050 macro. That's not a bad entry there. I was expecting it to continue doing this type of price action up until 11:30, but it ended up going early. That's fine. And then we took high of day and just failed to reach the mid gap closure. So these were my price objectives for longs. High of day, mid gap closure, and then this buy side liquidity pool right here. And then this was my best case scenario. So this is honestly a really, really nice move up. It just happened early, and there's, nothing wrong with that. That's fine. It did what it needed to do in generating buy side, took sell side, and then ran the high of day. The lunch macro played out really nice. The high of day, so it took out this high, obviously. High of day was formed at the end of the 1150 to 1210 macro, which is just perfect. Failed to reach that mid gap closure. That's just a sign of weakness. If it did reach the mid gap closure, that's fine too. Doesn't really matter. But I was aiming for this as the initial draw for the day. I guess the initial draw was the sell side, and I showed that with the short. But then this was the main concern for the day because it was Friday and we're down so much on the week already. I was looking for some sort of retracement back into the range, and we got that here. This bearish inversion fair value gap is right here. ICT has talked about this, obviously, but if there is a consolidation, which we have here, this is what I was looking at for the consolidation. This range right here. I'll make it gray. So this gray box is the total range of this consolidation. The inversion fair value gaps that are important are ones that are formed right before a liquidity pool is taken. So buy side is resting here and here. This inefficiency was formed right before it was taken. So not this one, because it was formed after or right as it was being taken. Doesn't mean it cannot be used, but the best ones are formed right before. And then they're also used as their initial presentation, meaning this is a bullish fair value gap. It is a buy side imbalance, sell side inefficiency, and then it's used bullishly. It's also used bullishly here and here. Okay. So you draw that out in time. If we were to displace away from it, it can be used to reverse price. And so that is what happened right here. Interestingly, I have this gray box here. I guess since I'm checking this now, I gotta make sure it's perfect because I just noticed something that's just kind of intriguing. There we go. So the midpoint of this box is right here. And I wonder, is that the exact high of day? I think it's off by one tick. But that's really interesting. But this range, this box isn't important. That's just highlighting the range I was looking at, trying to like look for the inversion. There's also this one, this big one. You can use this, but it's very large. This one's just a little more precise. But you can use either one, really. Also, this inefficiency is formed during a macro time. So that also makes it, that's just an extra contributing factor to why it's important. It failed to reach it here. That's just a sign of weakness. If it fails to reach something, that's a sign of weakness. Doesn't have to go to it. All this really did was just generate buy-side liquidity. And then later in the afternoon session, look at that. That formed the high of day. And something else that makes this a really important level is that the mid-gap closure is overlapping it. That's this yellow dotted line. That is the regular trading hours, new day opening gap, consequence encroachment. These blue lines are the gradients. This is the high, the low, lower quadrant, upper quadrant, and then this is the exact midpoint. And that's overlapping this level, this PD array. So that makes it very important to watch. That stopped price here at macro at the end of this 1210 macro. So that's pretty perfect. And then we generated sell side liquidity here. And then we have these lows here and then low of day. And the low of the daily fair value gap. I do recall saying right around in here, that I could foresee the low of the daily fair value gap generating a significant swing low. That's in my prior video. So we have sell side here, here, and then low of day. And then look at that. The actual low of day was generated at the low of the daily fair value gap. So that's pretty nice. I have to zoom in a little bit to see the text. I used the first presented fair value gap as inversion for my trade lower. And then it was used here and here in the afternoon session to take out the sell side below the market. It's really clean. Well, so for the lunch macro, 11:30 to 12:30 usually sets up the liquidity for the move, and then 12:30 to 1:30 will run the liquidity. So that's exactly what happened today. I was looking for the lunch macro to go higher, but because we went higher early, context is important. As you get new information, you have to reevaluate your ideas. So I was correct in the move higher, but it happened early. So what does that mean for the lunch macro? That means if there's sell side generated that makes sense, that the lunch macro will run lower. That's what that means. So we ran higher early. 11:30 is right here. It immediately starts generating sell side liquidity right here. Also, this whole move up is sell side because we have all these stacked lows on the move up. So there's liquidity here, 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 and here, and here. And it almost creates a domino effect. Like you can draw a trail going all the way down this price action of where all the sell side lies. This is the biggest gap that we have, or biggest separation of sell side liquidity. From here all the way up, it's all in very close proximity to each other. And that creates kind of like a domino effect. It takes some of it, and then it starts taking all of it. This, from here, because all these little stacked lows with the wicks, that's going to be some sell side. From here to here is the biggest separation. So that's just something to note. It doesn't mean it won't go take these. It just means that probably down to around here is your easiest objective for the lunch macro. And then this is like best case scenario down here. So 11:30 generates sell side. 12:30, or I guess this is macro. Macro forms the high. And then 12:30 is right here on this candle. And that is right around the time it starts running out the liquidity generated from 11:30 to 12:30. So that's pretty good. It's doing exactly what it's supposed to do here. So that's great. And it's using the first presented fair value gap over here. All the bodies are staying below the midpoint. In fact, none of the bodies even closed inside of it at all. That's extremely weak. Extremely bearish sign. So that's great. That's really good. Um, and then this is your second stage, leg lower here. This low is formed at the end of the 110 macro, the 1250 to 110 macro. So that's nice that it's forming at that time. It starts grinding higher, generating more sell side here. And we left this here, all these little stacked wicks in here. And then now we have this low here. So that just kind of stacked more liquidity there. And then at right around 130, it creates another significant swing high, utilizing the first presented fair value gap again here. So yesterday's trading was actually very good, very, very clean. It operated as it's designed to do. It was really, really good. That is perfect. Right around 130 as well. So you have time and price overlapping each other here perfectly, with it happening right around 130 and at first presented fair value gap. And then we get our second leg lower, which is the more aggressive move lower. Then 150 is here. So now we're into the 150 to 210 macro. Another swing high is formed using the high of the daily fair value gap. That's really nice. 2 o'clock is here. And we start grinding lower. And then 210, that's the end of the macro. And it just kind of there's just a sell program. Like it's just slowly grinding lower. And then we leave this low here. See that? This low and that low. Relative equal lows, sell side liquidity. And this offers you a nice scalp opportunity. If you missed all this move, this is a nice scalping opportunity during the 250 to 310 macro. 310 is here. So we're forming a retail bull flag down here and retail double bottom support. So retail is going to be all over potentially trying to buy support here, but this is just liquidity. They're going to take this out. So they form a bull flag. Retail is getting tripped up on the breakout here twice. So let's zoom in. It breaks out right here. Retail buys it, puts their stop losses right here or right here. Breaks out again. Retail buys it again. Stops go here and here. Anywhere down here. 3 o'clock is right here. We trip those buy orders one more time and then immediately run them out here. And then take the lower ones down here. And then the low is created at the low of the daily fair value gap. And then that's low of day. So that is a nice scalp because this low is left and it's likely to take that out. So when it comes back up and accumulates this little bull flag, fade that to go take this out. And then the low of the daily fair value gap is your best case scenario. And then there you go. So this is a beautiful day for trading. It really, really is. If you were to just absolutely destroy trading on this day, like if you were just to like go crazy, you could have shorted the open. You could have shorted the open, which I did. Targeted the sell side liquidity here. And then there's more of it down here. So you realistically could have captured a lot of this move. Okay. Use 10 o'clock as kind of your timing window to take profit because that's when there's likely going to be some sort of reversal. 10 o'clock is right here and it reverses. maybe you use that swing for another scalp lower. You maybe could have done that. Then you wait for sell side to get taken. There you go. And then the 1050 macro hits here, and we have displacement, inefficiency, break of structure here, and change in state delivery. And we have buy side above us now, and we're in macro. So you could have gotten in here and gone long for the buy side. Uses the consequence encroachment of the daily for value gap right here. Still in macro. It's at the very end of macro. It pops up, engages the buy side that was generated up here, and then it slowly meanders to the high of day, generating sell side. So you can take profit anywhere in here is great. You can even take profit right here. That's a great profit. That's a great move up. Really easy right here too. Then you can use the lunch macro. You could use this inefficiency. You could get in here because it's during macro. It's at the end of macro. It's above high of day, and it's overlapping the mid gap closure. And there's bearish SMT here. ES took these highs out. ES met my best case scenario, and NQ is not. So there's bearish SMT as well. You could potentially go short here during that macro time with a stop. You know, I would, whenever I'm trying to take a short like this, I give it a somewhat reasonable stop loss. That is probably just due to my lack of experience. If you're really confident this is high of day, then realistically you don't need to have that wide of a stop loss. But whenever I'm getting in a reversal move like this, it makes me feel more comfortable giving it some room. But of course that's just, probably due to experience, but you very realistically could have shorted high of day here. If you didn't short that, you could have waited for 1230, displaced lower, used the first presented for value gap. Could have used this little inefficiency here, because this is a 1 minute break in structure right there. At a time that you expect the market to start spooling lower. So you could have shorted anywhere in here for the sell side. And then 130 generates another significant high at first presented. Could have got short here or added to the position if you were already short. You could have gone short, taken profit, got back in short again. Used the high of the daily for value gap here. Could have added, could have got in. And then it went and took low of day really easily. So you could have just absolutely gone back and forth all day on this day. This was really, really clean price delivery. Monday was really clean, just like this. Tuesday and Wednesday was a real struggle. The lunch macro did not play out like this Tuesday and Wednesday. And which day was it? One of those days was high resistance liquidity in the morning, right here. That was Tuesday. I only traded the market open because I made that small profit that mitigated the small loss from earlier in the week, plus put me in the money. And because the week was the way that it was, I kind of just wanted to be done after that. So I didn't trade the rest of this. This is just a review of the rest of the day in hindsight. But it was very, very clean delivery of price. It was really nice. So I thought I would just go over it and have it on record. so that I could personally go back and look at this again, for study or whatever. So yeah, it was really nice. Hopefully this has had a good flow to it. I didn't have any notes. I didn't have a structure of how I wanted to talk about things or the order that I would talk about them in. Um, I just wanted to roughly go over this day. And this inefficiency is really nice too. That's a great thing to note. This type of thing happens all the time. All the time. If there's a accumulation and then an inversion for value gap inside of that accumulation and we displace away from it, very often that will be very important later on in the next trading session. Happens all the time. So that's great. I really like these types of fair value gaps. Really, I like these types of inversion for value gaps. Um, but yeah, I just think this is really pretty, and I wanted to capture it on a recording so that I can review it in the future. So I think that will be it.